Ready? All right. Thanks for joining me today. I'm Daniel from Ready. Maybe depends on how much you follow us on Twitter. You know us under our old name, Argent. We rebranded actually last week. So yeah, we are now ready. And yeah, I'm here today to talk about: are we ready for an on-chain neobank? For those who know us, Argent has been around since 2008. You probably know that basically from the day our kind of main thing was making crypto easier, onboarding new people. It always was around that idea of becoming a banking alternative that is basically true through the crypto ethos. But I mean, as I said, we are around since 2008, and yet the world is still running mostly on banking rails. So we obviously ran into problems doing that. So that's why now we are basically back. We rebranded, and we are like asking once again, are we ready for an on-chain neobank? Maybe now is the time. So yeah, Ethereum is turning 10. Argent also has quite some age. DeFi is turning 7. Is the inflection point now, today? A lot of things changed over the last 10 and 7 years. So I think in the early days, 2010 and so on, we had a big problem with fees, especially on Ethereum. Throughput was also not really there. I think there was always the idea of, you know, we have this global system to do payments, to transfer money, and for a long time, blockchains were actually slower and not capable of doing the volume that maybe even Visa does. But today we have L2s. Fees on all major L2s are basically below a cent for most transactions. Thousands of TPS are not an issue on especially CK L2s like Starknet. So this problem is more or less solved, to be honest. Also, a lot happened in terms of the adoption and the money that we are talking about, right? So if you compare the biggest TradFi neobanks like Revolut and compare that with Aave, I mean, it's maybe a bit apples to oranges comparison, but Aave today has more deposits already than a Revolut and has, of course, I mean, that's the focus, more loans open. Borrowing on Aave is significantly bigger than loans on Revolut. And I think Aave is also one of the most revenue efficient companies in the world even. Year after year, we see on-chain trading volume grow against centralized exchange volume. So there's definitely a trend of things moving on-chain also in the trading world. More and more assets are moving on-chain, right? So we have now a large amount of private credit assets, treasury debt, commodities on-chain. It's still, I mean, if you look at the numbers, it's still small compared to the overall market. But again, the trend is pretty clear. Stablecoins, very popular, talk of the town these days, going through the roof basically, and it's also not. It's not only something that people at crypto conferences talk about, right? So people use stablecoins. Sometimes they don't even know that they are using them because they're using applications that are tracks from it. It's also the traditional markets see this trend, right? As you can see, for example, with the success of the Circle IPO. So it's definitely not a crypto people thing anymore. And something also, I mean, almost accidental, you could say, happened. We kind of also built a new system for FX exchange, FX venues, right? So we had this demand for digital assets like, I mean, to a large degree driven by Bitcoin, but also Ethereum, Solana, and so on. People all over the world started wanting to buy them. So exchanges started popping up everywhere. Almost every country by today has an exchange, right? Or the big ones are alive in that country. And what you can actually do is you can transfer assets between them, right? And you can also use them for FX exchange. They are also an on and off ramp for the people locally in their currency. So I can theoretically, that's maybe not what it was designed for, but you can use exchanges for FX exchange, and that is also something that will move on-chain, right? So we see first players going into that. A lot of the exchanges are already issuing stable coins. There's more and more stablecoin issuers coming out every day. And once that moves on-chain, you also have the FX market, which is a very big market, moving on-chain, be more efficient. Similar story, I mean, that's a bit more of a stretch maybe. Merchant payments, almost no one is paying in crypto anywhere, but what we've seen is credit cards are everywhere. So almost everyone has a Visa, MasterCard, or American Express card today. Then we had these payment tools like Apple Pay, Google Pay launch. Now, yes, this is still running on Visa and MasterCard, but we kind of got detached from it. A lot of people don't take their card with them anymore. It's just something that happens on their phone. A lot of people don't even know really anymore, do I have a Visa card, do I have a MasterCard? They don't care about the brand behind that. On top of that, there's also regulatory pressure on, for example, Apple to open up the system. So it's not a big stretch to see that ultimately opening up, and maybe one day it's not like a MasterCard that you have in your Apple or Google Pay wallet, but it's directly your wallet and you can pay directly a merchant with stablecoins using crypto rails. And so basically all of these things, so it was a mixture of trends and infrastructure that we now have that we didn't have years ago. And that allows us basically today to string these pieces together and build a great user experience that is similar to what you've used to from, let's say, Revolut or your regular neobank, because we now finally have this great interoperability between crypto and TradFi. And even the regulatory setup is much better for everyone, right? So I think it's probably the first time ever that crypto founders in the US are not basically with one foot in jail, have to be afraid every day to get like served like a Wells notice or something like this. So everything seems to be pointing in favorable directions. So every element of consumer TradFi banking today actually has an on-chain equivalent. You have players like us, or to some degree that's also what Safe is talking about, being a bank account. You have, with stablecoins, you have an equivalent of fiat. So you can have assets in something that is stable compared to where you live. You have payment systems, you have crypto-native card issuers, you of course have loans and investments. I mean, that's always been there to some degree. So, but why would we care? So today's neobanks are ultimately lipstick on a pig. And I'm saying that as someone who was involved in building 3 of them. I mean, there's no doubt that they made things better, right? So neobanks helped greatly make the user experience of banking for a lot of people better. They made it much easier to open bank accounts. But ultimately, they are all constrained by the very old infrastructure that they are working on. They are all subject to the same regulation like traditional banks. They are all built on the same foundations. And that means 1 to 5 days of settlement in a network that is ironically called SWIFT, but is from the 70s. You are subject to FX access restrictions in some countries, like capital controls, or I mean, it's also just not easy for banks to offer that. Remittances, even though that is one thing that got considerably better for a lot of remittance corridors through companies like Wise, for example, that focus on remittances, are still at like 6% average cost. So, I mean, that's for sure better than 30%, but it's also very far away still from 0. And we even have places in the world, someone told me once a story, I think it was remittances between Zimbabwe and South Africa, where the best way to send money across the border is taking cash and putting it in the hand of a taxi driver. Because the fees for doing a regular transfer are just so high and you're never sure if it arrives. If you look on the other side, so on-chain banking, using stablecoins, DeFi, first of all, we have a very different setup that we are building with. So we have shared public infrastructure, the blockchain. We have shared protocols that everyone can use permissionless and build on. So you can actually build a banking features, a bank or bank equivalent much, much, much faster. So ultimately, it will not be only Ready doing something like this. I think a lot of wallets are having similar conversations right now or already building. And, and that will ultimately lead to more players, more competition, hopefully more innovation, and that, I mean, that's just how the market works, will lead to lower fees, better services, better products. And especially more operational efficiency. There is one thing that is where on-chain banking has a big advantage, especially from a business perspective. That is, we have less intermediaries. Reconciliation is much simpler. I mean, basically goes back to what I said before. It's simpler to build to some degree. It's easier to manage liquidity, and we're simply built on a more modern infrastructure. So we actually estimate that an equal on-chain neobank compared to a comparable in size regular neobank could probably operate at 40% less cost, simply because you don't have such a huge amount of IT infrastructure cost, because a lot of stuff is basically outsourced to the blockchain and just protocols that are optimized for everyone to interact with it, and mainly also compliance. So if you look at the average neobank, they have large headcounts. I guess Revolut today has over 2,000 employees. Large parts of that are usually support stuff that might not go away necessarily. I think that will stay apart. So I think that idea of, like we have today with wallets, you download something, you have your funds, and then you have no one to talk to when you have a problem. I think I'm not sure if that's really scalable to the average person. But compliance, operations, that's something, these teams will be considerably smaller at an on-chain neobank compared to a traditional one, because there's simply much less for you to do on that front when you operate on-chain first. But that is really the business side of things, right? So it's one thing to build an efficient business, but you still need someone to use it, right? So what's in it for the user? Why would it matter? On a few of these things I already touched, right? So if you're using the blockchain to transfer value, you have instant or near instant payments and settlement across the globe. So it doesn't matter if you're sending money from Germany to Nigeria or from Germany to Germany. You should ultimately, I mean, that's the case today. I think that should also be the case long term. You should have access to higher yield, just because the systems run more efficiently, the systems of capital allocation, and you have less intermediaries. And you get, of course, rid of the restrictions of access. You can swap as you like, right? So that also means you can swap between currencies. And you're, of course, more independent, because if you're self-custodial, right, no entity can freeze your funds. So there is less problems associated with that. There's easier access to asset-backed loans, right? Asset-backed loans, for most people today in TradFi, that's maybe their mortgage. But that is usually getting an asset-backed loan in TradFi is a very long process, right? You negotiate with banks. It's often, they wouldn't do it for small amounts of money. And because on blockchain, everything or most of the things are permissionless protocols, we don't have any of that, right? It's a click of a few buttons. And if you look in the future where maybe not only your wealth is in tokens, like Bitcoin or crypto first assets, but maybe your real estate is tokenized too, you can see how that is ultimately way more efficient. So to give a few examples, right? So who is that for, or whose problems are we really solving here, right? Because again, I like to do the comparison to Revolut, because I think they are one of the best players in TradFi neobanking these days. I'm from Germany. I don't necessarily need an on-chain neobank, right? So I use Revolut, for example. It works for me. I can transfer money to my friends. It gets a little bit tricky once I transfer money more internationally, right? So let's say I become a digital nomad. Suddenly it gets trickier. I might have, I don't know, maybe I have friends somewhere in Africa. Suddenly I get hit with fees and it gets trickier. Money starts arriving slower. But for the average person that stays in one country, lives an average life in Western Europe, it's maybe they have less bigger problems to solve here. And the TradFi system kind of works for them, I would say, in most cases. But if we look, let's say, in the global south, or actually we don't even need to look that far, right? So for this case, we can stay in Europe and look at Turkey. When we have economies with very high inflation, or basically badly managed economies, it's often the citizens that suffer from it, right? So you just happen to grow up in a country that is politically mismanaged, and you have to live in a world where inflation is 100%. What do you do about it? Most people would probably go to their bank or try to buy assets if they can, if they have money on the side. But that's then often where capital controls come in play, right? So in a lot of these countries that have the inflation problem, the next thing that happens is, well, now you're not allowed to buy US dollar anymore. Now gold is not allowed to be sold to you anymore. And that is exactly where something like this helps, because it is the easiest way to access US dollar or other currencies or inflation-safe assets compared to a TradFi setup where you have a lot of rules to adhere to, a lot of forms to fill out, and here you can just download an app, KYC, and get the assets that you want to get. Another example, slightly touched on that already, the classic remittance case. Probably not the first time you hear about this. I mentioned the 6% average fee on remittances. So if you have these classic relationships, you see that a lot. For example, Mexico, US is a good example, right? A lot of people migrate from Mexico to the US, family stays home, they work, send money home. That's a very important income stream for the family back home. It makes a big difference for these people whether you can send that money home basically for free, or if every single time you do that, it's like 2, 3, 4, 6, 20% taken off of that check that you're sending. And for these cases also, the timing is extremely important, right? So basically every day your money is in flux. That first of all means you worry, does it really arrive? But it also always a cost, because the person you're sending money to might have a loan they need to pay off. Especially in those countries, often a loan might imply 100% interest on the year. So these things matter. Sometimes it doesn't matter, does my money arrive in 1 or 2 days? In a lot of cases it does. And as an on-chain bank, these borders basically don't exist. You can send money to anyone. There is no hoops to jump to. There is no old SWIFT network that is fragmented and that needs to connect local banking systems. You can just send it, or you can maybe even directly pay the bills of your family. Another example might resonate with some of you maybe, the classic case of frozen accounts. That happens way more often than people think. It happens also to people outside of crypto. I mean, crypto is very classic. You work in crypto, you get paid in crypto. You made money trading crypto, and suddenly your bank freezes your account when you try to cash it out because they are worried where your funds come from. Or I think in case of Hayden Adams, it was just because of what he is doing. But it also happens without crypto involvement, right? I have friends who live abroad, for example. They wanted to buy an apartment. A big transfer came in, and the bank froze their account for 3 months, right? So, I mean, you ultimately, in a lot of cases, you might get the excess back, but if you have a major amount of your money locked away in an account and you can nothing do about it, it's first of all terrifying, and it is a cost again. So ultimately, it is about freedom. You as a citizen should not be affected by political instability, by things that are out of your control, but ultimately ruin your savings, ruin your life. And it is about opportunity. Just like communication should be free, movement of money should be free, and on-chain neobanks will ultimately enable people to freely transfer money across the world without having to know the underlyings, go through complicated processes, and creating equal opportunity that way. And so going back to the original question, are we ready for an on-chain neobank? Compared to a couple of years ago, we have the infrastructure. So a lot of things changed. The liquidity is there. The intersection between crypto and TradFi is there. We have big problems where crypto is already used as a solution. So we have a problem-solution fit. And so yeah, the answer to that is ultimately yes. A lot of the things are coming together, and it's now time to really build a solution for these people and move banking ultimately on-chain. So a little plug and advertising. Get ready. Join us on this journey, or build it with us. Be our competition. Rising tide lifts all boats. Thank you for your attention.
One question? Just one, yeah.
So, yeah, on-chain neobanks are promising, but using Visa or MasterCard credit cards with it, maybe, I mean, I hope that's temporary, right? Otherwise, we are still in a...
So I think credit cards are a good bridge for crypto to TradFi. So it's right now still the main thing that people use to pay for stuff. Crypto, unfortunately not used to pay for stuff, has multiple reasons. And I think it's basically like it's a temporary solution, I would say, that is offered to us that we should definitely take. Right? It's the fastest way to bridge that gap, because you launch one feature and suddenly you can pay with your wallet funds in millions of places. Is it long term? It will probably stay with us longer than we would like, but I see ultimately that as a journey to being step by step more on-chain native, right? So even today, the card that we launched settles in stablecoins, right? So the payments are not, the tokens are not sold and then sent to MasterCard, but is already moving a lot of the payments on-chain. And there's actually no reason why in the future that should not be a more direct way.
Thank you.